Bitcoin-backed lending, very big topic all over the news. Bitcoin is moving from this niche asset to a cornerstone of lots of big institutions, pension funds, states these days, ETFs, microstrategies all over the news. Maybe you can start with Max. Give us a quick intro. What is Bitcoin-backed lending? Why is it important? And how does it work?
Well, it's in the words, basically, Bitcoin-backed lending. It's when you use Bitcoin to borrow against that and access liquidity without selling it. And it has a lot of positive sides for borrowers, particularly for Bitcoiners. They do not sell, so they continue holding their Bitcoin, which is, I think, the most crucial thing for every Bitcoiner. You can also avoid capital gain tax in many regions by not selling Bitcoin. And obviously, you have certain cost of opportunity by sticking to the asset that actually grows in time. Now, for the lenders, I think that Bitcoin is the best collateral out there. It's actually super collateral because I think the most important thing for any lender is a liquid asset that is backed by this loan. So Bitcoin is the most liquid asset in the world. It basically trades 24/7. And I think for the lenders, it's also a huge opportunity to earn a bit more providing loans using Bitcoin as a collateral than providing loans using real estate as a collateral or any other asset out there. Because again, returning to point one, Bitcoiners don't want to sell their Bitcoin, and they're happy to overpay sometimes.
Buy, borrow, die, right? That's the core idea. Particularly in the traditional finance, rich people have been doing this since a long, long time. And now finally with Bitcoin, the most superior asset in this world, most liquid asset, we can finally do this as well. Living on a Bitcoin standard and spending the weak currency, the fiat currency. I think it's somewhat clear, but maybe we can bring it to a parallel a little bit more in the traditional finance world. Like mortgages are very similar, right? You put up a mortgage as a collateral, a property as a collateral, and then you take a loan. Phil, you are the bridge between the traditional finance world and the Bitcoin's finance world. Is that how you try to teach people to get people into Bitcoin-backed lending?
Well, I mean, I have to maybe start a bit earlier. So I started as a consultant for banks and traditional lenders, big investors, and I basically said what Max just mentioned. Like, I cannot understand why you're not moving into Bitcoin-backed lending because it's very lucrative. The market is not efficient yet. It's highly liquid. It's just such a good investment for you. And at one point, I talked to a pension fund, and they were still very skeptical. They had a lot of technical questions, and I just said, well, okay, let's make it simple. Let's just leave the term Bitcoin aside. I will tell you that you will earn 6 to 8% on the Swiss franc, 8 to 10 on the euros, and more than 10 on the USD, market neutral, super stable returns, no volatility. And I tell you that the collateral is 24/7 liquid. How does that sound? So that's basically that's your home turf. And that also was a bit when it clicked for me. So I was like, okay, so maybe to bring TradFi into this world, we need to play where they know how it works. And that was, so essentially Bitcoin-backed lending is it's an easy product. It's a plain vanilla, straightforward product. And so that it makes it easier, apparently, or at least that was my hypothesis. Now, as it turns out, it's still not so easy, but yeah, we're getting there.
We're getting there, yeah, we're definitely. What's the current state of Bitcoin-backed lending products out there? I know that there are the custodial side of things, which has certain risks, and then there's the extreme other side, the DeFi side of things, where you have pool-based lendings. So what are the options? What is your recommendations? Maybe Hendrik, you wanna start with that? Sorry.
Yeah, I would actually want to listen first to Max on this.
Okay, so as you said, there are like two extreme. I would say there's three options, in my opinion. So first, there's traditional custodial type of thing, which is, like, I'll give you an example. It's Ledon and other companies. So basically, custodial means you send them your coins and you borrow against their coins, but they're holding the keys to these coins. So they're basically effectively holding the keys to the collateral. Then there's a non-custodial side of things where you as a borrower use mostly, in most cases, you use multisig. You hold one of the keys and you don't send your coins to any custodian. You just put it on the multisig. So I'll tell about our solutions. There's like HODL Land, where we use multisig, and there's Debify as well, where we use multisig again. And there's, I think, also a third option, which is not discussed widely in the Bitcoin space, because obviously we hate shitcoiners. And the thing is like playing with DeFi stuff with wrapped type of Bitcoin, you know, with wrapped Bitcoin, with something that Coinbase does. You know, it's kind of Bitcoin, but not actually Bitcoin. So I think there's three options. But most Bitcoiners, they usually choose between custodial, non-custodial, pure Bitcoin without wrapping anything in it. Yeah, there's also inverse way of borrowing where you can borrow, like a fourth option for institutions probably, where you can borrow against like Bitcoin ETF, for example, which is kind of synthetic on top of synthetic, and it never ends well. But I mean, that's the path for institutions, and hopefully it's just going to grow and help adoption to the like a real proper on-chain Bitcoin lending.
Do you see that already happening, that you can borrow against ETFs, your shares of an ETF?
Well, currently you can borrow against ETF with the stock brokerage companies. I think in US it's pretty much straightforward, especially for qualified investors. And I think one of the potential technologies that could possibly allow you to borrow against different types of securities is Liquid by Blockstream. And I mean, we just need to build an infrastructure for that. And maybe at some point you will be able to use Liquid to borrow against not only Bitcoin, but also against MicroStrategy, against Metaplanet stocks and something like that. Which again, as a true Bitcoiner, I only support like core, hardcore stuff. But I mean, there's a lot of use cases, and I think that Liquid is kind of trade-off between, you know, not going to full shitcoinery and still, you know, onboarding a lot of capital to the Bitcoin through that.
Thank you. You mentioned multi-sig slightly, maybe just very quickly. Usually a multi-sig, or at least in Debify and HODL, is that you have the borrower, the lender, the platform, and maybe another fourth party of having the key. That also brings certain risk and responsibilities, right? Like, what if there's a dispute? What if there is a liquidation? What if the borrower never paid back the loan? How does this usually work?
Well, everything comes with risks, obviously. And I mean, when you look at it, or the way we see it on the borrower side, for retail, all these questions are not really asked, or not as much. The higher up you go on the institutional side, the more relevant are questions like, how does, well, where are disputes discussed? Where's the judge? Like, how do these things work? And I mean, the whole industry is still in development. It's not yet fully ripe, so to say, and I think there's still a lot to work out on. And I think for instance, we work a lot with Debify, and we're working on that. I mean, it gets clearer and clearer. On the other side, I mean, you can clearly say there is a good reason for multi-sig as well. I mean, we have seen in the last 3 years, I mean, Bitcoin lending is not new. We have seen quite some nasty cases and a lot of fraud also happening in the space. And I mean, Bitcoin gives you, on the protocol level, unmatched security. So why not use it, right? There are good reasons for using it. Then again, there are, as Max also said, There are different type of use cases, different institutions, and some traditional finance players, they will never be able to use multi-sig lending protocols. That doesn't work. But they will work with ETFs because it's integrated in their systems, and all these things comes with trade-offs, comes with some advantages, usually faster, usually well, yeah, more scalable if you want to say so. But you pay the price of less security. You don't hold your keys, and I mean we all know with what disadvantages that comes as well. We clearly see a good development on very traditional players, highly reputable players who will come into this space as well. And I think so the whole industry will develop, it will mature, and we are generally on a good path. I'm very much looking forward to it. Although there's still a lot of work ahead of us, that's for sure.
I think also when you discuss risk from the liquidity side, you have to also compare how to generate that yield in other instruments. Like, for example, Debify provides above 10% yield on the loans, and if you compare that to traditional finance, you are on the private credit side. And on private credit, you take different risk. You take operational risk, for example, which can cause, which is also a risk. Like here we have an over-collateralized loan, highly liquid, and you have a very, very nice yield. If you try to find that in a different place in the financial world, you have to go to private credit, which has operational risk and human risk, which is also a big part of the pitch to the family offices we work with when we now are going to work with Debify. How do we explain the risk compared to other places you find the same yield?
I mean, maybe one thing to add, and back to your question before, what's the status of the whole market right now? I mean, it's pretty clear there is much more demand than supply on the fiat side. So pretty much all the players, including us, and we try to solve that question, we're all missing fiat liquidity. There's much more demand from Bitcoiners for loans. And that's also the main reason why the rates are super high. I mean, if you understand Bitcoin, if you understand the security, the collateral that you hold, it's ridiculous what you pay. And if you compare it to more traditional products. But that's just how it is. I mean, this is just, there's a lot of effort to be made on educational. We need to inform all the family offices, institutional capital, and well, if you happen to have money to invest and want to earn a lucrative yield, please come speak to me. We are more than happy to work together.
Yeah, there's the funny quote of there's an infinite amount of cash at the Federal Reserve. Can't we just tap into that somehow and get better interests? Awesome. All right. Well, we shortly talked a little bit about risks in the different types of lending products, from custodial to non-custodial and DeFi. And then in 2022, you probably all heard of BlockFi and Celsius blowing up and FTX taking the whole market with us. I think the number I saw recently on Twitter was that they had a shared loan book of around 30 billion, BlockFi and Celsius only. And in this report, I read that we still haven't recovered from this yet. Why is that the case? Are we all burned out? Are we scared now? Or was it a different time in 2022?
Well, I can share my 2 cents on that. Actually, so what was happening in that business model in 2021 and 2022 is that it was a custodial model where, with a high degree of freedom, people would invest in yield. And a lot of the yield from the BlockFi as a genesis came from essentially lending it out to trading applications or themselves investing in fairly high-risk yield strategies, both on CeFi and DeFi. And so the issue is then that you are starting to compete to source capital, and you take more and more left-tail risks to actually provide a high yield to the end consumer. And that's a very, I think, perilous dynamic, which ultimately leads to excessive risk-taking and then sort of this simultaneous blow-up of a lot of people on the same sort of post-FTX era. Now, I think in the path forward, actually, what happened is that a lot of exchanges stepped in as lenders and credit providers to trading firms, and I think that's also a very unhealthy dynamic because it's again sort of creating all this leverage risk in a way that is very hard to see. It's intransparent, and I think that the solution for ultimately Bitcoin yield is very clear: is that you should really limit the ways in which the Bitcoin collateral could actually be rehypothecated or spent somewhere else. And so I actually think to offset this risk, we need to drive it more into actually lending solutions that are very transparent. But I think to answer your question, the real issue is that sort of there's a lot more like new hidden credit that's built up with exchanges that's actually not public to see.
I would say that the market actually, in my opinion, although I checked the statistics, the market actually recovered. I mean, there's more demand clearly, which Phil mentioned. We see that from our platforms, but I mean, a lot of platforms doesn't report the volumes, and there's like way more of them at the moment than it used to be back in the days. And there's also another player entering the field, which is banks. There are also, like in Switzerland, for example, there's like multiple banks who are doing Bitcoin-backed lending, and they're not taking it in account. And these guys are usually doing high checks. You know, they start with a significant amount of loan, but they just don't report it to some analyst on Twitter who writes a annual or quarterly report of state of Bitcoin-backed lending. So I actually think that market is bigger at the moment than it used to be. It's just there's so many players, and they're not reporting most of the stuff. So we only know about those who are publicly reporting or those who are willing to report. And again, there's more and more non-custodial solution appearing. And for non-custodial platforms, for some of them, it's it's a privacy issue. You know, why to dox yourself and disclose how many people and what are the volumes on your platform? What's the point in that? I mean, you want to brag about it? It always ends up not very well.
Right. Yeah. Maybe from a different angle, or maybe one step back, the reason why people borrow against Bitcoin is to tap into the Bitcoin liquidity and get some cash to do some things. And this might be for investments, buying a property, for example, or for day-to-day livings. But we also see a lot of people who go then leveraged long against Bitcoin. And I know, Hendrik, you're building an option and future platform. Isn't there a better way of doing that?
Yeah, so I think the most important trend that is unlocking a lot of these use cases is that the volatility of Bitcoin is on a secular downtrend. So in 2021, it used to be around 80%, 100% implied volatilities on options, but realized volatility was often in that same zip code. And now you're looking actually at an all-time high for Bitcoin, and we're at 40% vol. So that's a very interesting sort of secular trend that makes the collateral and the management of the loan-to-value ratios easier. And at the same time, the very interesting part of this cycle is, I think, is that the cyclicality of that volatility and also the cyclicality of, let's call it derivatives of borrow costs for crypto capital, like look at just funding rates, basis of futures. All of that is also like really on a very clear downtrend and is no longer actually reacting as much to the price of volatility. In previous all-time highs, like volatility and borrow costs would skyrocket around all-time highs, and now we're actually not seeing that anymore. So essentially, this lower volatility of Bitcoin, I think, is unlocking a lot more. Ultimately, on the supply side, the ability to actually facilitate the borrowing.
And I think what's important to understand is this happening in all asset classes. Like you own a lot of real estate, you take a little bit more debt to buy more real estate or to fund your lifestyle. So I think It's just that now Bitcoin is mature enough that we understand the future potential, so you don't want to sell, but you still have bills to pay. And so yeah, I think we have to realize that this isn't something new. This happened with all asset classes. And I think that will just accelerate when more and more people understand the power of holding Bitcoin over time.
Since it's nothing new and we have mortgages and we have art-based lending, all kinds of different products, what's the regulatory landscape in Bitcoin? What does the regulator say? Can we just use it? Do we need to have licenses?
I think especially when looking at Bitcoin-backed lending, I mean, there's still quite a big hurdle to take, especially for institutional capital. So banks, for instance, they are required to underlie it with tier 1 capital, meaning equity capital, which makes it incredibly expensive for banks. That's the primary reason why a lot of the traditional banks, they like more the digital asset banks, they started doing that, and private banks as well, but that's then usually very high tickets and just for a small selection of customers because it is expensive for them. And I do think because the regulator still looks at Bitcoin-backed lending as basically an uncollateralized loan for the balance sheet of the bank, which doesn't make any sense. It's really quite stupid, actually, because it's usually over-collateralized and it's highly liquid, as we discussed, so it really doesn't make any sense. But this is how it is. So this is something that we have to work on, or they have to work on, banks especially need to work on that. There will definitely steps taken in the next few months and years. I mean, you can see a lot of pressure coming from the US. The US is now very much forward-looking on many different fronts, and usually Europe comes 1, 2, 3 years behind, but it will come, and the regulator will understand it as well. But right now, it's not yet in a good space. Let's put it that way. Mm.
And from what we see, we think actually private capital is going to be quite big in this space because they have less regulation and they can basically lend with their own balance sheet, and more with education understand the value of Bitcoin, and therefore we will see more private capital entering the Bitcoin lending on the liquidity side. So I think private wealth is definitely a capital source that we will see a lot in this space going forward.
I mean, for us, regulation is a bit different since we just provide technology. So we're basically infrastructure platform, and we don't touch money. We don't provide liquidity by ourselves. We don't issue loans. We just onboard lenders on one side, and then we bring borrowers on the other side. So it's like peer-to-peer. And since we don't touch any cash flows, we are not obliged to be regulated in most regions where we operate. But still, we're following all the recent regulation. Again, regarding US, they're actually probably might accept a very comfortable for non-custodial providers regulation, where it will be clearly defined that if you don't have any unilateral control over the customer funds or you don't custody Bitcoin, then you are exempt from any kind of money transmittance licenses. And I think this just, if US is successful with that, all other countries will follow with that as well. But overall, I would say Bitcoin-backed lending for liquidity providers, particularly if you're liquidity providers, I would say it varies from region to region, and sometimes it could be very complicated. Like, for example, you can get liquidity, you can sell your services saying that you're a Bitcoin-backed lending fund, but in some regions you cannot originate loans by yourself, so you need to have a partner who has a license in terms of originating the loan. So it could be very complicated, always requires a lot of legal work to put in effort.
Yeah. Initially you mentioned that one reason for borrowing against Bitcoin is the tax benefit, that you're not selling your Bitcoin and you don't have to pay capital gains tax on it. Our experience is that not every tax office sees that way, and it also depends on the solution. For example, the Australian tax office, the ATO, says that if you receive the exact same Bitcoin back, then there is no capital gains tax. But if the funds get pooled, for example, like in Laden or Unchained or in a pool based in DeFi space, and you don't get back the same one, then you have two capital gains tax events. One when you initially take the loan, and the second one when you pay back the loan and you get your Bitcoin back.
Yeah, as I said, in most of the regions there's no capital gain tax, but again, there's definitely some of the regions that have pretty weird regulation in that sense. It's not only actually about Australia, like in UK it's also very tricky. So you need to structure your product, and I think the most important thing is that what I don't see in other platforms, especially in custodial platforms, that they actually don't inform until the end the customers that they might be a subject into capital gain tax. In some platforms, it's not very clear. So I think that you need to try to inform a person about the risks, or at least to state, okay, we don't provide any legal or tax advice. If you have that question, it's not to us. Come to your legal tax advisor, ask them, and then be back and borrow against your Bitcoin. But it could be tricky, of course.
Is that simpler for the other side, for lenders? I guess all you get is some interest, and then you pay capital gains on the interest.
Well, I mean, yes, for sure. In our case, definitely, because we are dealing with qualified and institutional investors primarily. So they are, anyway, they know how to handle taxes. Usually they are professional investors. So yes, they have to pay capital gain taxes pretty much everywhere because it's their profession. So yeah, it's less of an issue. But also, I'm Swiss, and in Switzerland we don't have capital gain taxes at all. So I wouldn't consider myself an expert in avoiding capital gain taxes. Let's put it that way.
All right, let's use the last few minutes, maybe a quick round. What's happening on everyone's platforms or roadmaps and businesses? You want to start, Hendrik?
Yeah, so on Thalex we focus on options and providing also like better ways to stack more Bitcoin without having to sell your Bitcoin. And I think it's very complementary with the Borrow application. I mean, really, it's all about having the Bitcoin as collateral to ultimately accumulate more. If you structure this with put options, for instance, you can have a very similar effect where you protect your principal downside, and Bitcoin goes down, it prints you cash, which you can then reinvest in Bitcoin, and ultimately, when then the price recovers, you end up with essentially more Bitcoin, and the equity returns, so to speak, on the Bitcoin you reinvest, they then pay for the option premium. So that's something that we're trying to educate Bitcoin holders on. We're partnered with Bitfinex, where we want to make it really easy for all their customers to get access to this form of Bitcoin stacking. And then it's also something that I start to see with essentially borrow applications where put protection allows the liquidity side to essentially offer more attractive rates.
So we continue building this stuff. We just announced yesterday that we are officially out of beta. We've completed successfully multiple security audits. We've open sourced the app. We added more and more hardware wallets. In next few weeks, we're going to add bigger and more lenders. So the rates obviously will go lower. And we're also entering the micro-lending space with Debify cards. So there will be an opportunity to borrow on the go through your mobile phone, small amount of money, again through multisig. And yeah, there's more announcement that I cannot disclose at this point because there's a legal obligation. But yeah, it's going to be excited, and definitely, I think the biggest thing for Bitcoin-backed lending, what Phil mentioned, that we all need to work together to bring rates down, lower. It's like, again, I completely agree with a lot of people who are like screaming on Twitter, you know, it's a super collateral, you need to like, it's never going to be zero, first of all. So nobody going to give you liquidity with 0, 1%, 2%, but at least decent 7, 8% could be something achievable in the nearest future. We're working on that together with Phil and with Sander as well. So hopefully it's going to be an opportunity pretty much soon.
Yeah, and on our case, I mean, the biggest challenge that we are facing right now, and that's what we are working heavily on, is the whole regulatory question. So we are aiming to get an asset manager license that will allow us to get significant institutional capital in there. We do not have it yet, but we've handed everything in. So that's and that would allow us to really channel pension fund capital, which still it's not an option right now. And we want to be that regulated phase towards institutional capital so that we can deploy it throughout the different platforms which are out there and are all desperately in need of fiat liquidity. And then, I mean, our big vision or purpose is to funnel liquidity into the Bitcoin ecosystem and basically fuel the whole industry. And that requires lower rates, more capital, and it's an effort that we are all in together, and we're working on that.
Yeah, for us, it's all about education for the family offices to understand how good investment it is to get exposure to over-collateralized Bitcoin loans. And I think same as Phil, the regulatory side and how to actually create structure at scale so you can actually raise a lot of capital quickly. We have now seen Bitcoin treasury companies, how they raise a lot of debt in a very, very efficient way because you use a structure that the capital is used to. I think we need to do the same here and keep educating and raise a lot of money to deploy into over-collateralized Bitcoin loans. So that's what we are working on now.
Cool. Maybe one more futuristic topic, because we have 2 more minutes left. Is it Bitcoin-backed lending only a temporary thing until we have hyper-Bitcoinization and we get rid of fiat, or will this always be a thing?
I don't think it's temporary. I think we're only starting, and I don't think we're going to get rid of fiat. I mean, it's probably going to take another form. Maybe it's going to be stable coins in 5 years, mostly used instead of, you know, like fiat. But I think it's like hyper-Bitcoinization is coming not through getting rid of fiat. It's coming through having opportunity to pay with Bitcoin whenever you want to pay, borrow against your Bitcoin in any bank in the world. So that's what hyper-Bitcoinization means for me, you know, not destroying fiat. If fiat will be destroyed, there will be a huge crisis and you won't think about Bitcoin in the first place, probably about bullets and guns. So, I mean, yeah, that's my take on that.
Yeah, I would agree. And even if it would be the case that fiat completely disappears, even then there will be lending, because lending makes a lot of sense, because you can invest in meaningful and good things like building a tunnel, for instance, which is just only doable when you get a lot of money when you're building it, because you amortize it over the next 50 years or something like that. So even then there will be lending. It will be different, but it makes a lot of sense.
Yeah, I think we'll also see more companies using Bitcoin as collateral to fund their operation. That'll be a core asset in many companies. And I think we'll just see more and more of that. And I believe I think fiat will be backed by Bitcoin at one point rather than being completely taken away, because I agree with Max there. I think politics is quite strong, and I think if we destroy money, we also destroy politics, and that will be a quite dangerous world, at least for a short period of time.
Awesome. Thank you. Thank you, Hendrik, Max, Phil, and Sander. Thanks, everyone.